Reuters, TransCanada Corp finally abandoned construction of its controversial Energy East pipeline on Thursday, taking a $1 billion Canadian blow and handing environmental groups a major victory in efforts to hamper Canadian oil development. The decision, nearly a month after the company halted regulatory applications for the project in the face of tough official scrutiny, is a blow to the ailing economy of the New Brunswick province, and heads off a border political row over the project. Sponsored Canada's National Energy Board, NEB, granted TransCanada a 30-day suspension on September 8, after the company said it needed to review the impact of new assessment criteria that would consider the $15.7 billion Canadian dollars, $12.58 billion, project's indirect greenhouse gas contributions. Energy East, which would take 1.1 million barrels of crude from Canada's oil heartland of Alberta, would have fetched higher prices for Canadian producers, whose landlocked product trades at a discount to the West Texas Intermediate benchmark. But its importance has somewhat diminished for TransCanada since the United States, this year approved the company's Keystone XL pipeline, which would run from Alberta to U.S. refineries. Energy East was up for its second NEB review, after the first stalled last year amid protests by environmentalists, and after revelations that regulatory panel members met privately with a TransCanada consultant. After careful review of changed circumstances, we will be informing the National Energy Board that we will no longer be proceeding with our Energy East and Eastern Mainline applications, TransCanada said on Thursday. The company said it was taking a non-cash charge of $1 billion Canadian dollars in the current quarter, because of the cancellation. The decision had been substantially priced into the company's shares, and TransCanada's stock dipped just 0.25% to $60 after opening in Toronto. They had fallen nearly 4% since August 23, when the NEB expanded the scope of its assessment. A judicial review into another project, Kinder Morgan Canada's $7.4 billion Canadian dollars Trans Mountain Pipeline expansion, was launched on Monday, with lawyers and project opponents saying Canada failed in its duty to consult First Nations and other groups. Shares in Kinder Morgan Canada were flat at $17 Canadian dollars and 7 cents in early trading, compared to a 0.3% rise for Toronto's S&P/TSX Composite Index,